right. A good evening to everyone. The markets closed last week. The market closed a little bearish, more bearish last week on the DXY. I remember what I told you. Every time the market closes on the weekend, what you want to do is you want to go through the weekly chart on the DXY, on the Euro USD, and on the GBP USD. Even though we trade mainly on the Euro USD and the GBP USD, you want to check the DXY as well, because the DXY is the dollar index, so it gives you the general idea of what exactly the dollar is doing. And every time we close the market on the weekend, you want to analyze what the week has done. Why? Because during the week a new weekly candle was being formed, and that weekly candle is not confirmed until the week closes. So once the week closes, you want to look at how that particular weekly candle affects the entire idea you actually had of the market. All right, so starting from the DXY, if you watch last week's recap, you know that I told you that I was already bearish on the market, and that still holds. All right, that perception I have of the market still holds and is still valid. I am looking for a further push down to this fair value gap. So for this week, I'm keeping my eye on this fair value gap. It could either touch here, here, or here. Excuse me, but anyhow, I'm looking for bearish movement to this particular fair value gap. And once it gets there, I'll be looking to see what the market is going to be doing. Why am I looking to that particular fair value gap? Because if you look just on top here, liquidity over here has already been cleared out. The market has already cleared out liquidity here, and we have this fair value gap here. And where's my next draw on liquidity? Down here. All right, so this is my next liquidity sweep I'll be looking out for. But I know that before price gets to that particular liquidity sweep, it will have to encounter that fair value gap and cross that fair value gap. So depending on what the market does when it gets to that fair value gap, it will determine my idea of the market. So that's one of the reasons why at the end of next week I'll have to come back here and do this again to see how that weekly candle formed when it got to the fair value gap in particular. But that's what I'm looking at for the XY on the weekly. Let's head over to the daily and let's see how price was forming generally throughout on the XY. So you look at price has been making some very nice movements here. If you've been studying the market structure videos I posted, you can tell what's going on here. But price comes here, it breaks down, crosses this liquidity and closes down to confirm that liquidity, goes up, draws into the fair value gap here. All right, just about the midpoint, or in fact it actually crosses to the midpoint of that particular fair value gap. How do I know? I can put a Fibonacci tool here, all right, right here, and then my 50% mark is the middle point. So it crosses that 50% mark, which means that that fair value gap has been mitigated. All right, so we talk about when we say a fair value gap has been mitigated, it means that the fair value gap has been used efficiently by the market. So price goes in, it crosses that fair value gap, and then after crossing that fair value gap, it begins to drop and continues dropping down. Price goes down again, it drops down here, comes up, taps into the fair value gap once again. So that daily fair value gap was actually a part of this weekly fair value gap, and then price drops down. Now that pushes us into what we were expecting for last week in particular. So last week Monday, we had price push down all the way here, give us a retracement, and on Friday we had a very bearish move on Friday, which is good because it's this bearish move. If you look at the bearish move, it shows you how bearish the move actually was, right? Because you look at that particular candle, there was zero pullback on that Friday candle. Usually what you will see on a Friday, right? Let me take a Friday that was bearish to show you. All right, good. So you see, this was like a Friday. this particular candle was a Friday candle. Ideally, you see a Friday candle close, right? It will come all the way down, but it will pull back up a little, all right? In fact, sometimes you see a Friday pull up even more. But you see how this particular candle closed. Let me look for another Friday. You see how this was a very small Friday, so I'll not even consider that. But a lot of times when you look at how Fridays would usually close, it never closes so bearish, especially for a week, for the close of a week. That shows you how bearish the price action really was on Friday. What does that tell me? It tells me that price really wants to be bearish, and tomorrow morning I'm going to be looking for sales. This entire week I'm going to be looking for sales. Could there be a possibility of a pullback? Yes, but I don't trade. I'm not a contrarian, all right? So I don't trade against the trend. I like to trade with the trend. So I'll be looking for sales the whole of this week, all right? The whole of this week I'm looking for sales. Sales to which area? This will be my first zone. I'll be keeping my eye here. Number one, I'll be keeping my eye here, and then I'll be keeping my eye over here. All right. I don't necessarily expect price to go all the way to the sell side liquidity yet, because it's just a weekly candle. But for next week, I'm looking to see how price uses the fair value gap. It could mitigate it and give us a signature of a reversal. But if it closes below that fair value gap, oh my goodness, that would be good for us, guys, because it means that we are going for that sell side liquidity. All right, that's what we're looking at on the DXY, on the weekly and the daily. So let's look at what we have on the Euro USD as well. So on the Euro USD, once again, we start our analysis from the weekly chart. So let's go to the weekly chart and let's see what the weekly chart has for us. We have very similar trades, because once again, guys, remember, all right, the DXY is inversely correlated with the Euro USD. What that means is that when you see the DXY going down, you would see the Euro USD going up. All right, it's the direct opposite of it. In fact, many of the times it will give you the exact highs and lows in reverse. All right, so just know that whenever you're looking at the Euro USD, it does not mean that you should not look at the DXY, because the DXY is important to give you a total understanding of what exactly the market is doing. You cannot just ignore the DXY like that just because the Euro USD is similar to it. No. All right, because there are times where you have a disparity between the two of them. All right. So let's look at the Euro USD. All right, so we look at the weekly charts, and what do we see here? Once again, we can see price making some very nice moves to the upside. Price comes here, taps into this fair value gap and pushes up. It has closed above this weekly buy side liquidity, which gives us a confirmation that price wants to keep buying, because as of last week, price rejected off that level, telling us that it is a possibility for sales. But guess what? Last 2 weeks it did that, but last week it showed us that it is still bullish. So what am I looking at? I'm looking to see price go bullish all the way to this buy side liquidity right over here. This is a monthly buy side liquidity, which means it's a very, very important zone for us to be looking out for. All right, so I'll be looking for price to come all the way up to this particular monthly buy side liquidity. Once price gets over there, we know that price is breaking out of this general consolidation area, which is good for me, because what that means is that we are going to have a very amazing September, October, November, and actually we call it seasonal tendencies. When you look at the seasonal tendencies of Euro USD and GBP USD, it tends to move a lot in September, October. Those are some of the best months for that particular pair. For me, last year, the entire of last year, I made my most amount of money in the market in September. In September, I used like 1 week or 2 weeks to pass like 2 profit challenges, guys. So like make sure that when it comes to September, you don't joke with it. So I'm actually looking forward to seeing price cross above. Let me tell you what I'm looking for exactly. So whenever you look at a consolidation can generally be boxed in, can generally be just put in a box, right? So the truth of the matter is that since we started all the trading we've been doing practically since January of this year, we've actually just been in a very tight consolidation. You can see that on the weekly chart, price is not really making so much movement, right? So price has generally just been consolidating. But guess what? We've still been making our money inside. It doesn't mean that this is the best market for us, right? Because the best market for us is when price is trending. I mean, look at this beautiful trend that was going on over here. These are like consecutive weeks of just making money, you know. So this is what we like to see, but it's not every time you get that. And as someone who trades just Euro USD and GBP USD, you have to be nimble sometimes when it comes to something like that. So you look at how price has been behaving here. What will give me a bullish confirmation is when price closes above this box over here. What do I mean by above this box? Let me be more clear. Hold on. So above this particular liquidity zone, all right, above this particular liquidity zone, all right, once price closes above there, I'll be extremely bullish. And the signature price gave us last week tells us that price wants to do that. So I'll be trading towards that particular zone. So on Euro USD, I'm gonna be very bullish on Euro USD. GBP USD, I'm gonna be very bullish. I'll go down to GBP USD as well. Let's check what's going on the daily charts. So weekly I'm bullish, daily I'm bullish, right? All right, so let me clear up a few of these zones because these zones are no longer needed. So I'm clearing out this one. I'm clearing out this one since it has already been used by the charts. This fair value gap has also already been mitigated. I will not expect price to come back down to that particular fair value gap. It's good, but I will not be expecting price to come down to that particular one anymore. We have our sell side liquidity here. We have our daily drawn liquidity. Truth be told, this particular one is not a very strong one because I'm not really focusing on that one. Based on the signature price has given us from last week, it's probably going to clear this one out on Monday or Tuesday. So I'm really actually gauging for these particular ones. All right, so let's see what price does this coming week. So let's look at the 4 hour as well. All right, so the 4 hour chart is looking semi clean. You can see how price comes in here, taps into the fair value gap over here. All right, it taps into that particular fair value gap and begins to take off again. Once again, price comes over here, it closes above. All right, you can see that it closes above this particular liquidity zone. All right, it closes above it. Hold on, let me put the line there so some of you can see it in case it's not very clear. Price comes, it closes above that particular liquidity zone. All right, once that closure is done above that liquidity zone, it confirms that we are still bullish. Now price comes over here, it draws into the 4 hour fair value gap, and guess what? It rejects, and we keep going up right from there. One of the things that I'm looking at that might happen, all right, is that price could potentially come over here if we don't. Let me see how we have. Let's see what we have on Monday. Let's see Monday. Okay, Monday the 19th, we don't have a lot of news. We don't have a lot of news events, and you can see that a lot of news events are pushing towards the end of next week. What that means for us is that we might see more movement towards the end of next week than at the beginning of next week. So what could then happen is that we could have price push down here, all right, and come up here. That is a possibility in price. So what it means for me is that I will be conscious entering into trades, all right, at the beginning of the week. That's Monday and Tuesday. It does not mean I will not be taking trades. I will most likely be taking trades because the way Friday ended is very, very bullish. Okay, so Friday's ending was extremely bullish, which means that price wants to run. All right, price wants to run. So it could run, but I'm also very cautious because I know on the weekly profile we don't really have a lot of news events on Monday and Tuesday. In fact, there's literally no red folder news events on Monday and Tuesday. All the red folder news events start on Wednesday. All right, and Wednesday is a very bloody one because we have FOMC. All right, well, it's the minutes, so it may not be as bloody as the actual FOMC. All right, so we have, but like I said, Euro USD I'm looking to buy. All right, I'm very bullish on Euro USD. GBP USD. So let's go to GBP USD. Let's start once again from the weekly chart and let's see what the weekly chart is giving us. Okay, I think I have a lot of alerts over here. Let me just remove them so that it makes my chart a little neater. All right, so on GBP USD, we can see very clean price action moving to the upside on GBP USD. And I like what I'm seeing here because let me just say this, one of the worst times to trade, all right, for me personally, and in Euro USD and GBP USD, since those are the only two pairs I trade, and they both go in the same direction. All right, so one of the worst times for me in trading is when those two pairs don't agree with in the direction. For example, you might have Euro USD buying and GBP USD selling. When it gives you a signature like that, it's very hard to read the market. I don't like trading in conditions like that. All right, and let me give you a tip, guys. You don't have to trade every day. Day trading is not everyday trading. And as you grow in your trading, you will get to a point where you realize that you don't even want to trade every day because there are some market conditions that you don't want to be trading in. For example, the way the market is moving right now since January to this particular month, right? It's not a period you want to be trading in. If you had other pairs that you trade in, you might want to shift your focus, or other markets that you trade in, you might want to shift your focus from the currencies to that particular market. And actually, I'm working on a strategy for that. And once that's ready, I'll let you guys know. But in a situation like that, you just halt trading your currency pairs because there's no point. All right. Of course, I made some money this month, but you still look at risks to reward because, mind you, we are professional money managers. All right, that's what we are. We are professional risk managers. Okay, so we are always analyzing our risk. Do you want to be in a market that is more risky? No, right? We don't want to be in a market that is more risky. So you just want to stay away from that when you can. So looking at GBP USD on the weekly chart, once again you can see that price is making its way to the upside, and once again GBP USD closes extremely bullish for last week. Lovely price action, lovely price action. So what am I looking at? My target for GBP USD is this particular, I think this is a weekly buy side. All right, this weekly buy side, and then this monthly buy side liquidity. But what am I expecting for this week? It should tap into this. All right, I'm expecting price to tap into this. For last week in particular, if you've been following the chart, you would have noticed that GBP USD has been extremely bullish. All right, it's been moving with speed. I think it might be because of some data that came out last week, but GBP USD has been moving with speed. I can see when I look at the charts, when I look at the alerts or the events that we have for this particular week, I can see a lot of Euro events. So maybe Euro will pick up after GBP USD, but GBP USD has been extremely bullish. So nothing is changing. I like the movement on GBP USD. All right, this is a very nice confirmation, and we could have price keep going up from next week, and that'll be amazing. That'll be amazing. I'm looking forward to seeing something like that next week, guys. So let's go to the daily. Let's head to the daily and wrap it up. On the daily, you can see how price comes so close to that fair value gap, this particular fair value gap, this daily fair value gap, but it doesn't actually touch that fair value gap. So I'll be looking to see price tap into that fair value gap. I do not expect that fair value gap to act as a form of resistance at all. All right, I don't expect to act as a form of resistance. Why? Because I know that the main target is going to be the top over here. And mind you, at the top here, we have another fair value gap from July 2023. All right, from 18 July, the day of 18 July 2023, that particular fair value gap has not been mitigated. Price just tapped the end of that particular fair value gap and didn't do nothing with the fair value gap. So I'll be looking to see price. So you can see price didn't mitigate that particular fair value gap. So I'll be looking to see price go back in there, to go back into that particular fair value gap, which then coincides with the buy side liquidity that we're looking at. All right, so that's what I'm looking at on the daily chart as well. We drop down to the 4 hour and you can see very lovely movement on GBP USD. GBP USD is just shooting for the upside. We are likely to see a bit of a retracement before it keeps going, but I don't think we'll see too much of a retracement. Price just took out this liquidity zone on Friday, meaning that we are likely to see some retracement to the downside, all right, but not too much, and then we should start moving up again. All right, so that's what I'm looking at for this week. It's gonna be an amazing week, guys. All right, take your time, go through this video. For some of you, you may have to watch it again. Feel free, take your time, watch it again. Watch it a third time if you have to. But what is important is that you actually have an understanding of the things I'm calling out in here, all right, so that over time you can do your own analysis even without me, and that's the real goal. All right, so guys, stay sharp and stay safe in the markets.